Good morning, good afternoon, and good evening to you all, wherever you are joining me at this hour. I say welcome to the last trading day of the week. At the same time, we Investdata Trading Academy live with Ambrose, 236th edition. On this stage, at this point, we are seeing that the market is also extending the mid-trend on improved sentiment. That is the good news here. Despite that, we saw a kind of extreme volatility as a result of investors and the market players reacting to the banks failure news and all those stuff. But I will tell you, as at yesterday, we saw that most of this matured market has recovered from that shock as a result of what the quick intervention of various government and and central banks of these countries and this economy. I tell you that things are really getting better now or going in shape. But like I always say that as a trader investor, whenever you are entering the market, you want to see what will guide you, or you want to know what will guide you to know what is happening. That's why no matter who you are, or whether you are an experienced trader or a novice, whether you are trading any instrument you are trading, chart is very, very important. And this start to guide you to see how people are reacting to any information that is available in the market. Like I mentioned yesterday, that this kind of information that come in different dimensions as a result of economic news, come as a result of corporate earnings, come as a result of like kind of this corporate news in terms of whether earnings or a situation that where a company is going the other way, whether they are posting a profit warning, profit warning that yes they might post loss, or even as the news of banks going to going towards the stress and all those stuff. This has the way of driving investors or checking investors psychology, and that reaction will be very obvious for you to see them in the chart, because as they are reacting, the chart will tell you where they are looking at. Are they reacting positively or negatively? That is why no matter who you are, no matter what you are trading, getting the knowledge of how to read your chart is very, very important. Whether you are a long-term investor, buy and hold, whether a trader, you need to have an idea how this chart works so that you can be able to combine it with your what with your fundamental and other tools to make informed decision is very, very key. And that is why today, being the last trading day of the week, we have seen how the market has performed for the previous 4 days. Today is the last trading of the week, and we have seen the volatility of going down and rebounding within this 1 week. And this is what the beauty of what equity trading, because the volatility creates opportunity for you to buy low and sell high. And also volatility also let you to know what is the factor driving this volatility. Is that factor is it very strong? Is it that okay you want to go down? And that is why also as you are looking at your chart, you need to look at what is the momentum behind this chart, what is the energy behind this chart, what is the impetus behind the chart, so that you will know exactly how far it will go. If it's coming down, what are the factors dragging the market down? Is it factor that is just temporary that will overnight also fizzle away and market start on the normal direction? Is it a major fundamental issue on industry or on a company that is driving the price down? If these are not the factors, that means whatever you are saying is what market forces of sentiment that will not last for too long before you see a reversal. That's why you have to look at the market, because I will tell you the calmness we are seeing in the market yesterday and today for me is a plus for the global market, and which is good for every one of us. I believe that this bank rescue is part of what calmed the market, and it is good that this mature the economy, government and central bank took the right step to intervene so that they can reduce the fear in the market. And for me, it's a good one. Yes, we know that the major factor that is driving both commodity, oil, and is the what is happening in Ukraine, and also government policies on different domains, or whether they want to increase their consumption to the so the improving outlook for China. These are the things driving the oil price up and down. Like I told you yesterday, we saw oil price coming as low as almost around below 70, hitting almost 15 months low before rebounding. But that trend is still sustained as a result of what the positive outlook we are seeing in China economy, that okay, when the economy is growing, demand will be high, and that was also if as all hands will be on deck to see that what is happening in Ukraine is addressed, and also the way that the market economy I told you, if they can also slow down in warming up for war, is investing more on their defense and all those stuff, I know that it's also part of investment that those companies that are into hardware, manufacturers and also companies are making money. Who's going to impact their shareholders also, impact their share price? We agree, but I'll tell you what, the economy should confess that, looking at the war, I think this is the time for our leaders, globally to start thinking and also do the right thing. And I believe that if this peace returns to Ukraine, the issue of Greece, this Grace D going up and down, 60 days, the 60 days extension, 120 days extension, all this will not be there again. There will be no interflow relationship between every every economy and also every country. That would be a good way. I think going into war should not be the best at this time. Rather, let's think about humanity. We are all here to live, not to cut short our life. Yes, I will go back to the market. I see that the global market is, so I said it is a myth, and the Asia market that really panicked. That I said the Asia market is upbeat again now as we speak. I will tell you that the equity prices in that market are looking good as a positive news that also came from the Wall Street as a result of intervention there, and that is what is fear. I can see that the banks have been rescued, and I tell you that have calmed the market. For the general market, as we speak, as I told you earlier, for the whole global economy is still what is still missed, and also banks of this market are still trading in a mid direction ahead of what ahead of this today being the last trading day, that is ahead of the weekend. I see that that is what is going there, and volatility remains as we speak. And even the bond market and other fixed market, gold market, we are seeing also volatility there. But the Asia market, I will tell you now, they can say yes, those markets are breaking out. I will tell you, majority of the indicators there are in green, and that is a good note to have, because I will tell you these were no factors that show that investors can react quickly to what any information we can see. Both in Hong Kong, we are seeing a positive indicators as we speak now. Negative index now positive one as we speak. Both in Japan, that is a good one. Versus South Korea and others were looking good now, and that is good for the market. Then if you come to US, being a major market, US is mixed. I see that the two of the out of the three indicators, market the major market indicator in US, two is in red and white is what one is in positive. But the good thing that Europe, I tell you, the market has opened sharply, not only just say recovery. This is a sharp opening for this market today, and for me, it's a good news for those in that market. It's a good news because I tell you, the market mode continue to improve on easy concern over what over the deepening financial crisis towards the end of this week. For me, it's a good one. And as we speak now, US dollar is also trying to find direction. But I'll tell you that euro is looking stronger as the still kind of instill confidence, even that the central bank adjusted their rate also with 550 basic points, even when because of the intervention and also declining inflation, despite that they still went ahead to inflate their rate for their meeting they had yesterday. For me, yes, we are seeing that the market is still very very strong on it, despite the rate hike. But I'll tell you that the intervention in the field, credit field and others has also boosted investors' confidence. As to speak now, that confidence also expect to reflect on what on the industrial and other sector, and that is what is happening as we speak. Despite the adjustment of policy rate, in the up direction, I tell you that the market there is good, and that zone, condition is becoming better. Especially the banking condition is becoming better, and it's good now because of what the big intervention of the central bank and the government of this domain. But I believe that on this intervention, we're going to see a better market next week, and this fear start coming down. We're going to see the market moving on a good recovery. Not I expect that yes, just we expect to see Fed meeting for that week next week, as I said on Tuesday and Wednesday, the Fed meeting. Why down here in Nigeria, our own policy meeting will hold on Monday and Tuesday. All eyes are on this outcome of this meeting because they have the war force shaping the market. But I believe as we have seen the inflation data for the month of February here down here in Nigeria, we have seen the last treasury option. Yes, also looking to see the outcome of it. That was and also this is the period that most of the first year bank, not most, all the first bank have not seen the results. Why the second tier, even they have seen their unaudited account, we have not seen their audited account. I believe that when this thing comes to the market, the result that will be another catalyst that will, depending on their payout and on the number, final number, but on the strength of the number we have seen so far for the banks, the second tier, we have seen improved performance. If that performance reflects in their payout, that will be another boost in the market for me. I mean, on that note, there's no cause for alarm, but rather let's take advantage of what is happening in the market now. We saw that our market pull back, and now we're seeing the right to try to stabilize and gradually try to buy. I believe that we'll see real rebound or stability after the MPC meeting, and also more results with the market and the election season at the end of tomorrow, Saturday. Now know that any election season has gone, all eyes will be on what on the outcome of the tribunals, and then also and the tribunal, and also the 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 what we call the inauguration of the new government, or handover ceremony of the new government at the end of the day. That will also bring a new direction, a new leaf to the economy. We believe that if the change is done, I expect to see that the market will change. And I believe that we as investors are preparing to take advantage of what we're likely to see in this period. That's why the coming masterclass is very, very important for every one of us. Like I said that in today's market volatility, how do you make a good profit with increasing uncertainties around the globe? By what? By identifying where the reversals are what are occurring, and applying the right the right strategy that works for successful investors, people, or traders. You need to understand this. That is why in the coming master class, even the topic I'm taking about understanding the trend and pattern of all the past election years, and also especially when the incoming new government is coming in, how market perform with new policies. All this trend and pattern will be discussed, and we have to know when to jump in with these patterns, and when to know with these reversals, and also other breakout strategies we're going to share in that class. That's why I will encourage every one of us that are in this class today. If you have not made your payment, go ahead. The market is pulling back. It's for us, we traders. And when I saw it, I was laughing. This is a good one for us to position for what the second half of the year, and also the second quarter of the year and second half of the year, because this is going to be a trend where government the incumbent government is going out, and the new government is coming in. These changes we need to provision how the world will see it at the end of the day, when everything is laid to rest from the tribunal or from the Supreme Court. When everything is laid to rest, what will the next move? What will be the attraction? Who is coming in? These are the things, because changes from the economic managers, and also those that have been the ministers, these are going to reflect on where the market went. That also bring confidence and attract more fund into the economy, because they know that in the next 4 years there will be another stability in the economy. These are the things we are looking at, and I'll tell you, there's no doubt moment in that class, that master class. All that you need to know will also be shared by other experts in the market and professionals in the market. That's why you need to make time and be in that class. It's very, very important that you are there, because you need to identify those breakout patterns that work, not all breakout patterns that work. The fake ones, you know them, the one that work also. You need to have the blueprint of the technical blueprint to work that also guarantee you some level of return also will be shared there in that class, because Rashid will be there also to share to give you some things technically that will also guide you to know what allow you to be looking at also fundamental, and also Mr. Abiodo from the strategic manager, head of strategy in CSCS, also will be telling us how to strategically take advantage of expected reform, and also what's going to happen in different sectors and industries. How can you position on them? Which sector is going to benefit from whatever is going to come, and also who are going to benefit from this season that will just is about running out now at the end of 31st of March. You have to position and be in the bus. People are complaining that market is back. For those that are expected to be in the market class, I think you should be happy, because if you pull back, what the opportunity for you to buy right. When it goes up, like I said, don't fall in love with the market. Those that are really with us, how to take profit. I don't play with it. Take your profit. If pull back, the opportunity to buy again, to look, because market will not remain in up direction. Market will not remain in that direction. You must balance it. That is how to trade in any market, so that at the end of the day, you take informed decision that will guide your investment there. Profit, or also boost your confidence. These are the things you are going to go, because in that class, it is good for you to understand some key levels of the market as of key levels and the prices of equity, and that key level to help you to make informed decision. It's key that and it's very important that I look forward to see every one of you in that class. Yes, for today, for this class, for roundup, I want to share three key three key uh, three keys that boost your what you're trading or you're investing. These three keys, they are brief, but I think you should also put it at the back of your mind that you need to understand it. The first one is that you must understand the heartbeat of the market. What is the heartbeat of the market? I mean heartbeat, where is the market direction? What are the things influencing the market? What is the liquidity level? What is the direction of the market? That is the heartbeat of the market. You need to understand where the market is going. That is the first key. I said three keys to boost your what you're trading. That means as you are opening your chart to see where the market is going on different time frames, you need to see where the market is going. Is it going up? Is it going down? What is the total direction? What is the sentiment in the market? And what is the perception in the market? Once you're able to get it, I say you are good to go. It is this that also you'll be ready for the market to turn. Be ready for the market to turn. That's why I say you must know different level. You'll be ready for the market. If the market is going up, or we are seeing the market going down and it's about to turn, that level that is going to turn, that point is a very key point. If it's going up, that is you want to pull back. What are you taking your profit? That point is going to break out to continue the uptrend. I say break out of resistance. You need to be ready for what? Be ready for market turns. Be ready. Is it turning positive or turning negative? Be ready so that you will to catch what you want to do at that particular time and take decision that is the best. Also, the last one there, make money while learning. Make money while learning. Why I say while learning? Because the game or the knowledge of trading or investing is not what you enter a school today, like you enter investing, you get your graduation day, or you enter a profession, you do professionalism, you now get a certificate, you say you're a professional. No. As you are trading in the market or you are investing, you want to up your knowledge as you're up your knowledge, as you're making money while learning. In the process, as you are making money, you are learning. As you increase your knowledge, you are increasing your confidence to help you boost your return. These are the three keys that you need to have when you are investing or when you are trading. Say three keys to boost your trading. I say one that know the heartbeat of the market. That heartbeat of where the market direction. What are the factors influencing the market? Which direction is market going to? Another one, be ready for market turns. Either market is turning from down. Now we saw a pullback yesterday. For almost 4 days, market was trading. The last 2 days, we saw the market have broken down the T line down, go down. Now your eyes will be where will be the turn for the market to go up. It didn't out on the break T line jump in. For investors, what will I do as a pullback now? This and also you continue to learn. I say make money while learning. You need to. That is why the common master class is very, very important, because why are you there? It's not only just to come and sit. You are there to get knowledge that even I'm not there, another person there. You can look at your chart. Okay, you look at what's happening in the market. You can see the direction. And even when they say do this, once you understand it, you quickly jump into it. You are not asking questions. You are not dragging feet, because your knowledge have been increased how the market works. These are the things you need to know. It's very, very important for you to know the heartbeat of the market. To consider the larger market together. That means you first of all look at what our NGS, where is it going? Our NGS, where is it going? Not to look at it. Look at different sectors where you intend to play. If you want to invest in a banking stock, for example, you want to buy Cine Bank, GT Code, you need to look at what is the banking sector index, where is it going? Are you seeing a pullback in banking sector? Okay, what is the individual stock you want to buy? What is it doing? You are looking at the chart to confirm all this. Also, you look for different sectors in the market. Before you know it, you are already feeling a point where you are going to take position. And that is why in all this, chart is key. Because chart is key, your price action is very, very important. Your timing is very important, and also the momentum. Why the momentum? Because you must consider what the power or the strength behind the trend you want to jump in. If it is going sideways, what is the strength? If it's going up, what is it? If it's pulling back, what is the strength? How far will it go down? Once you're able to get it, you are good to. That is why you must understand the heartbeat. Because also in reason, you must consider different time frame, as I mentioned earlier. Different time frame must be considered when we are looking at what the heartbeat of the market, so that you get it right. Because if you're a long-term investor, I think looking at the day chart will not give you a lot of, will not give you real direction. But if you're a long-term investor, looking at monthly and weekly chart will give you more direction, because you are thinking long. For me, that a trader, I'll be looking at 15 minutes, 1 hour, and a day chart to know what is happening immediately. That is why it's very, very important for you to understand what I'm saying. Also, to be ready for the market turn, you need to look at what is the alternative scenario in the market. what is the the key price levels in the market, what is the trend line telling you. That is why when you see me draw trend line when we are discussing, it's not for fun. We are still looking at putting the distant levels, but it's not for fun. It's because these are the things that will guide you to make informed decisions. It's very, very important because it will help you to know exactly where is the resistance level, where is the support level, and where the trend line moving to. Once able to identify these levels, and give you whether the sellers are becoming charge of the market or the buyers are becoming, or what the demand level or the supply level in the market. You need to understand all this. Is the buyers in charge or the sellers are in charge? When you get it, it helps you to work, to reason out fast and also take action. Yes, say make money while learning. Why I say make money while learning? Whether you're a short-term trader or a long-term trader, once you are acknowledging, once you are acquiring knowledge on what on this investment, on what to do, I will tell you you are already on the right path to profit, because that is the only way you can learn. And when you see people sharing knowledge, it also boosts your confidence, because what you know, when somebody else is also confirming it, you become like a king. That means you are doing that. But once you are doing, and you think that you are guessing, and think that you are not, and you are guessing, or you are doing it with fear. But once another person confirm it that this is how it's going, it gives you a good strength that you are doing things right, and that also help you to move forward. That is why it's necessary for us as a trader or investor to keep on learning from different source, from different angles, so that at the end of the day, it becomes a better thing for you, to make it. It's not that learning is bad, but when also you need to consider the source where you are getting from. There are some people that because they are getting for a lot of information, at times if they are confused. And that is why you stick to where you get your information, that you know that this information are authentic, you know the source. But when you are getting from left and right, all these information are coming, at times this information can delay you. This information can confuse you because you are getting from a different source. But when you look for a particular direction where you get your source, and also you know that that source you are getting from, these are the information that will guide you. Stay put there and also ask questions. This is what I mean when you are looking for knowledge. It's not just here and here, and at the end of the day, you are confused more, because but when you see people that are giving you clear direction, you follow them, and also at the end of the day, that will reflect on what on your portfolio is very, very important. Like I said earlier this morning, that we are seeing a kind of market stability coming back until we see where it's going to end for the day. But quickly now, I want to look at what is happening live in our market, so that we can from here we can start going how the market is going to close for the week. But this is the last trading of the week ahead of the election tomorrow. You need to know that once the election season finished by tomorrow, latest by Monday, we're hearing the result of the new governors of different states. That also be another good news for the market. If by God everything will go smoothly. As we speak now, the market is still below 55,000 mark. Market is being 54,900 point what for 72, up by 15.12, just up by 0.03. This is the market position now. Market is up by, it's good that market is in green. And also if you look at the market market breadth, as we speak now is still positive at this time. We're having 7 gainers against 4 losers as we speak. I think that the market is so hard. I mean, yesterday we saw how the life of MTN draw the market down because of profit taking ahead of the markdown. I believe that once after the markdown and the Q1 start coming, we're going to see a rebound. Yes, we have four decliners against 7 gainers. I think the market spread is positive compared to the marginal gain we're seeing, which is a good sign that the market is trying to work to stabilize. And I believe that outcome of the MPC meeting was to further give market direction at the end of the day by next week. But as we speak now, the top losers start from there. We're seeing that Veterans Capital is one leading there, followed by Sterling Bank. Sterling Bank is trading at 1 naira 50 kobo flat, losing 2%. Kati Transport there 1 naira 27 kobo, 1 naira 27 kobo, and GT Code 24 naira 50 kobo. These are the 4 losers as we speak now, not up to 5. I told you that we have 7 gainers against 4 losers. On the gainers chart, on the gainers side, we are seeing that Prestige is leading there, followed by Royal Estate. You can see UCAP trying to rebound there, back to 11 naira as we speak. Also seeing Arrow Chupisco and UPDC. These are the top 5 gainers. We expect to see more before the market, because I tell you, as the market have kind of pull back in the bearish situation for 5 days, market will become attractive, especially as all eyes on more potential account to come. This will be the trigger for the market, and also we expect also some fixed income instrument to mature to provide more liquidity, and for sure I say that the shorter term to make return. The pullback in this banking stock has also increased their worth, their yield in terms of dividend yield. That was also a plus for the market. And the general market also was seeing a low price to earning ratio for the general market. Tells you that your investment in the market as speak now, you still have a shorter time to invest. For individual stock, also tell you that your waiting period in those stocks are short. That's what you can look at when taking your investment decision is very, very important. We want to look at the last one here before we go to the chart. We're looking at the market in terms of volume, in terms of activities. We're seeing that Capital Protect is one leading in terms of volume traded so far, about 36.4 million shares traded so far, followed by Access Corp, 8 Access Corp 6.4. We can see that Transcorp also 4.1 million shares, and Trinidad Bank was in 3.7, and Fidelity was in 2.7 million shares traded so far. I can tell you that yes, I'll tell you, the market is trying to find direction, especially we have seen that the strict intervention in the mature market has also slowed down the fear, and that continuous fear will also start coming up reducing. For me, the market will still pick up. For that, you don't need to worry at all. Just hold your position and watch where the market is going. Quick one, want to call out our chart here. You can see that where the market is going now. For straight 2 days, you can see the market is going now. But for today now, market is trying to maintain a kind of stability here. Let's watch. Let's bring our C line here. It's very, very key, because at this point, I told you once you see your index action or price action below the T line, make sure that oil is likely to come back to the T line to continue toward the direction where it's going. Without that, if you're in the market, you're not looking at anything, I think you are guessing. You need to something going to guide you where is the market is at this point, where is it going, where is it to turn up. Once you have this at the back of your mind, you are good to go. And we need to know the strength of the market now. That's why we need to call up our ADA. Don't forget that we looked at it last time. It's very, very important that I can explain something for you this morning. What is happening. It's good that we call it up so that we can quickly look at it. Yeah, the next one is what money flow. That we can use it to round up the class, and look forward to see you on Monday. But let's see what the money flow is also saying. Yeah. Yes, you can look at the money flow now. Let's start from the index action. The index action, you can see that yes, if you draw a trend line now, you can see that the market has broken the trend line, which I did yesterday. But yesterday was still, at the time we were discussing, the market has not pulled back as such. Also in the marginal, but on this trend now, you can see with the trend line now, you can see that the market, the trend line has to touch a 2 basic points. If you can see yourself now. I see that it touch here, touch here, touch here, touch here. The Kakura market is pulling back, but it's trading what below below the trend line, which is the green line you are seeing here. Market is below it, and also below the T line market is where the market is trading below the T line. You can see that it's going far from the T line. Anytime market are coming back, that is a sign of a rebound. For this for the T line, but I told you there are momentum behind the market. I told you what happened yesterday when the market crossed. You can see it here. But now the market is correcting. Come here and see. At this point, these two have not crossed each other. They are still trying to go. One trying to still go back up here. One is still there. So at the end of the day, we'll now see whether this upper is going to return up or continue and cross. Whenever it crosses over, momentum has also changed. That means market is weak, and we are trying to see until it also come back again. And if you look at your morning flow now, morning flow as we speak now, it's around 50.7 or 0.8 flat now. Market have pulled back. I think yesterday it was reading around 54 points. But this morning, I think the market is slightly in green. The market is still relatively strong, because it's still within the 50. Once it crosses the 50, that is I think the market is relatively weak. But at this point, you can see that at the end of the day, before the market close, you might see a rebound on this trend. For me, what is monitoring? I want to look at this point here. I told you what happened here. As the market was coming down before the rebounded here, you can see it here. It came down. But cutting there before the touch, it rebounded, which is possible to happen here. You can see that at this point now. Let me enlarge this place. Let me put this so that you can see what I'm saying. That they have not. You can see that these two now they've not crossed over each other. This is moving on the opposite direction. Once one cross each other, it tells you that that's confirmed a weak market. We're already seeing here, but at this point they have not crossed each other. They are just trending on the same direction. But once you can see up, either across up, down, to confirm the real position of the market. There's no cause for alarm at all, because I know that for the new week we are entering, the market will find direction, clearly when we start seeing positive earnings and more declaration. And don't forget that also this period, this markdown up and down, but there the life of this Nigeria Brewery on the 17th of March to be marked down today. But next we'll see the markdown for Dangote cement and all. This will drive the price of stock lower, and that for we investors, traders, who are good to see it down, and that's where we start jumping in. For investors too that are dividend income, you can still take your dividend. When you put back, you can still buy more to accumulate that short stock, depending on what your investment objective. This is the position of the market. But because of our time, let's look at one stock on the beginner start. Let's look at what GTB doing now, because we are seeing GTB. What is the momentum in GTB? Let's look at it together and look at what is happening in another stock that is gaining. Then we can now round up the class for today. You can see that this a day chart for you of your GT code. You can see we're going to try to gain this morning. You can see that pull back that the T line. But once you start coming back again, it's a good sign. You can see what I told you earlier. Look at this indicator, the ADS. You can see what has happened here. Money flow is still above 50, around 58, 56, which is before GT code. Let's look at 1 hour chart for GT code now. Yeah, 1 hour chart for me is not doing badly. 1 hour, that's why it's slightly below the T line. I think the last 3 hours the stock is struggling to come up, and that is good. You can see here already. You can see that the VX since in 1 hour chart, you can see that it has been below the T line, and that has also showed on the what on the ADS. For me, there's no cause for now as far as we're looking at for the result. Finally, what is happening in Yoka as we speak now? Is it that time for us to jump in fully? Because it's a question that many people ask them. Is it time to jump in fully? You can see that after UCAP as a Magna, you can see in 1 hour chart what has happened. But in the last 3 hours, you can see that the stock is still oscillating. You can see it here what has happened, but still below the T line. A cross of T line will confirm what we should be doing at this point now. And money flow is still very low. There is patient for traders to watch. Whether it will be pulled back down here further low to watch. But once it cross the T line, that is where it will be jumping in. Or that is for 1 hour. But look at a whole day chart where it's coming from. The whole day chart, you can see where the price is. Good that the price went to recover all it lost yesterday at this hour on the daily chart. You can see it here. This is what we call a bullish engulfing. Bullish engulfing covering the bearish chart candlestick. It's a good one. But I tell you, you can see that this one is coming down until the good one across the red one. Like I said, the momentum is strong. But for me, for those that are still waiting, let's still watch and see for what it's a good recovery that we're seeing. Those that are entered at that price yesterday, they are already gaining something to the whether it's 4% or 5%, which is good. So let's keep an eye on it. Cross the line for traders like me, but for investors that pick out this price. And for those that know that yes, go to wait for medium to long term, can keep buying at this price. But for traders, you need to confirm the direction with strong momentum before you can jump into the stock. That is how to trade the stock. Don't just jump into the stock and go. On this note, I will say thank you and see you on Monday. Because of the election, there will be no more live class for the premium class tomorrow, or Q&A session tomorrow. For all of us, we go to work to vote, go to work, exercise our franchise as a citizen of this nation, to choose our leaders at our state levels. All go out there and encourage you to also go and vote for your candidates. See you and the rest of your day.